Good afternoon. Thanks for joining us today to have a little quick discussion on really the planting season, the wet spring that we've been having so far this year, 2019. Today is Wednesday, May 8th, and as you can see, we've had just quite a bit of moisture received in our areas, and want to talk about what your options are from a crop insurance specific standpoint. As I look outside today here in central Illinois, there's sunshine, it's warmer weather. Planters are going. However, you know that these days have been few and far between, and the amount of moisture we've received to date has just been tremendous, and really more on the horizon coming. My name is Jason Gama. I'm with Compeer Financial. I'm the State Insurance Product Officer for the state of Illinois, and just put together some information here quick covering three topics: replant, first crop, second crop, and prevent plant, and what your options are as a producer as we aim to continue to serve you and your policy, and what makes sense for you as you start to think about the wet spring that we're having and what your options are. To help kind of depict what environment we live in today from a planting standpoint, these are the latest numbers from NASS talking about the planting statistics on a percentage basis. Again, Compeer Financial covers 3 different states: Illinois, Wisconsin, and Minnesota, parts of each of those states. And you can see here for corn, as of Monday, the 12th, this past Monday, we are 11% planted for corn in the state of Illinois. You can see that last year at this time, we were at 88%, so quite a bit behind. That last number there is a 5-year running average of 82%, so we are way behind. Some progress has been made this week for sure. We'll see next week what these numbers then increase to. Wisconsin, 14% planted this week, up from 7% last week, 28% this time last year, and a 46% 5-year average. Minnesota, 21% planted this week for corn, up from 6 last week, so some good advancement there, some good progress there. But you can still see from a Minnesota perspective, the 5-year average is still at 65%. Planted this time historically. So we are behind for corn, no doubt. We jumped to soybeans, and not much has been planted for all 3 states. You can see those numbers there. We do remember last year in 2018 that soybeans went in early and often. You can see that from an Illinois perspective for sure. 49% was planted this time last year, a 26% average, just 2% this week. 4% in Wisconsin planted, and 3% in Minnesota has been planted to date. Some important dates as we talk about the crop insurance policy, really the basics here. You'll see that there's 4 columns listed here, and over on the very left column is the states that we cover, Minnesota, Wisconsin, and Illinois. You'll see that the final plant dates for both corn and soybeans are listed here in a graph form. We've got some maps coming up in a couple of slides here that will help depict what those dates are a little better. The point I want to make here is over to the right-hand side, the 2 columns over there are the late planting period windows. The policy allows you full coverage to plant up until the final plant date in the first 2 columns, but you can continue to plant into the late plant period on the columns to the right. What happens to your crop insurance guarantee at that point? If you plant within those windows over to the right 2 columns, you'll start to lose 1% per day off of your insurance guarantee. Sometimes, economically speaking, that could still be a viable option to continue to plant into the late plant period. However, we'll talk in greater detail later in the presentation about what your options are as you start to enter into those final plant dates and then into that late plant period. From a map perspective, looking at Minnesota, these are those final plant dates for corn that we just talked about on the previous slide, and that's where the line is in Minnesota. North of the line, the final plant date for corn is 5/25, 5/31 below the line. Again, those are where you're going to get full coverage if you've planted by those dates. Jumping over to soybeans in Minnesota, June 10th is the final plant date for the entire state. Looking at Wisconsin corn, north of the line, 5/25, south of the line, 5/31. Jumping over to beans for Wisconsin, 6/10 above the line, 6/15 below the line. Again, final plant dates. Illinois perspective, the entire state for corn is June 5th. And then soybeans for Illinois, it does jump around a little bit there. You've got a couple of regions where it is June 15th and a couple of regions where it is June 20th as the final plant date for soybeans. That line, the black line there, depicts where double cropping rules start to come into play when you get south of that line. We won't talk a lot about that, as most of Compier's territory is north of that double cropping line. So first option we want to talk about is replanting. And really what the definition, what is replanting, is it's putting the crop back to and replacing the seed or plants of the same crop that was already planted as the first insured crop. We say it that way because every year we get the comment from producers that I had corn planted and I replanted soybeans to that corn acreage, and that's not replanting. That's first crop, second crop, and we're going to talk about that in a couple of slides. But replanting is putting the crop back to what it already was. There is a 20-20 rule, so 20 acres or 20% of the unit, whichever is less, has to be met for a replanted payment to be made. The policy does provide the insured, it forces the insured to replant back to the same crop for 10 days into the late plant period. So you talk about those first couple of slides we went over. In Illinois, our final plant date for corn is June 5th. The policy forces you to replant corn into that late plant period 10 days into the late plant period, which gets you to June 15th. So you're going to have to replant back to corn through June 15th, and at that point your options start to change to be able to switch from corn to beans. We'll talk about that in future slides. And from a Wisconsin standpoint, final plant date there, May 31st, plus those 10 days gets you out to June 10th to have to replant to corn. Minnesota, May 31st, plus those 10 days, still the same, June 10th. I would just encourage you guys to get in touch with your insurance officer with Compier and to talk through what your area, your county, these dates do move a little bit, as you saw on the previous slides, to make sure that that all of the dates are being followed and all of the rules are being met from that standpoint. Replanting payment, so the policy allows 8 bushels for corn, 3 bushels for beans. There's a couple other entries there for silage and grain sorghum. So it is the amount of replanting payment per acre, be the lesser of 20% of the production guarantee or the number of bushels listed here below that are applicable for the crop, multiplied by that projected price and multiplied by share. So what this looks like, as an example goes, this is dealing with 100% share, of course, but for corn with a YP or an RP policy, you've got that projected price of $4 times the 8 bushels, if we're talking corn, would give you a payment of $32 an acre. Soybeans on that YP and RP policy, that spring projected price of $9.54 times the 3 bushel that the previous slide allowed, give you a $28.62 payment per acre. Those projected prices is what Replant's payments are based off of, not the harvest price. It's the spring projected price, what those are paid off of. And again, this is a 100% share example. If you had share crop or 50% share or less, that percentage would come into play in this example as well. Must contact your agent, crop insurance officer at Compier prior to replanting the crop. That agent has to turn a loss in and get the AIP, the approved insurance provider, notified of a replant prior to you actually replanting that crop. Super important. If it's less than 50 acres that you're replanting, we can work those on a self-certification replant, which basically simply means an adjuster does not need to come out and do an appraisal. If it's more than 50 acres that are being replanted, the adjuster does need to come out and do a stand count, a stand reduction appraisal to make sure that it qualifies for a replant. But either way, less than 50 or more than 50, you do have to contact your agent right away so that they can file a claim, notify the insurance company prior to you replanting. And we talked about the replants and prevent plant payments are based on the spring price only, no adjustment for the fall price. So that's replant. That's putting the crop back to the crop that was initially planted. Now we're going to jump into first crop, second crop, as it's known, which is where we're going from in our area, one crop to another. A lot of cases, it's going from corn to soybeans. gets late enough in the year that you have planted corn, insured corn, but you want to then switch to soybeans, and what are the rules around that? When can I do that? So as we talked about a couple slides ago, 10 days into the late plant period is when you're going to be forced to continue to replant back to the same crop. But once we get past those windows, now we can start talking about switching from corn to soybeans or from one crop to another. So a couple of examples here. This is, again, looking at corn. Illinois, that June 5th final plant date. I'm going to be replanting into the late plant period by 10 days. But once I get to June 15th, now I can start to think about, do I want to switch from corn to soybeans? In Wisconsin, that date's June 10th. Minnesota as well, June 10th. The company must be notified, again, so contact your agent so that they can file a loss, so that the insurance company can send an adjuster out and inspect and appraise that first crop before you're destroying it and putting it to another use like planting soybeans. Really, you've got three options at this point. The first option is you can just leave the first crop fallow. So you've got planted corn out there, it's failed, the adjuster comes out and appraises it, you can leave it or plant a cover crop and receive 100% of that first crop payment. You'd owe 100% of the corn premium, but you would get 100% of that corn indemnity if you did nothing. You could plant a second crop on that ground, but you can choose not to insure it. If you choose not to insure the soybeans in our example, then you would receive 100% payment on that corn crop and owe 100% of the premium on that corn crop. You'd have planted soybeans out there, but you chose not to insure it, so you would, again, receive 100% of that corn payment. And the last option is you have that planted corn, it failed, you went ahead and planted soybeans after it, and you did choose to insure it. Now we're getting into the weeds of first crop, second crop. If you plant that second crop soybeans and insure them, now you're going to start to see some reductions happen. You're going to initially get 35% of that corn payment right off the bat. You're only going to owe 35% of the premium to begin with. And then the insurance company is going to sit and wait to see what happens with the soybean crop that's out there that's insured. Then there's an either-or kind of analysis that happens at the end of the year. They're both in your favor. You're going to get the better of the two deals every single time. It happens behind the scenes. What's going to happen is once those soybeans are harvested and we know whether they have a loss or not, if by going back and receiving the remaining 65% of the corn payment is more than keeping the 35% that you originally got on the corn and getting 100% of the soybean payment, they'll give you the better of those two options. So number one option is I'm going to keep the 35% of the corn payment that I received and get 100% of the soybean payment if there's a loss on the beans, or that's option one. Or the second option is we'll withdraw your soybean loss and go back and get the remaining 65% of the corn payment. Whichever of those two scenarios is the greater value to you, the greater amount to you, you'll get automatically. So that's part of the policy. So you don't have to make that decision. It happens behind the scenes. The insurance company figures the better of those two options and gives you the best of those. In order to receive any of the indemnity, the entire unit must be appraised and destroyed. So if we've got partial units or partial fields that are this scenario, first crop, second crop, we have to basically wait until harvest is complete to be able to finalize that entire unit. Because even though you're ripping up some of the corn and going to beans, there's other planted acres of corn in that unit, and we've got to wait until the very end. In that case, you won't get 35% right up front because they'll have to make an evaluation of what happened to the entire unit when it's just partial. Prior to that first crop acreage being released, the insured must sign a certification that basically outlines your intentions. You're making that choice. Am I planting a second crop? Am I insuring it? So on and so forth. The adjuster will help walk you through that process. And again, your insurance officer at Compeer can help you with these nuances a little more in detail. Now we're going to jump into prevent plant, which is really the hot topic as we sit here at the beginning part of May here. because the forecast doesn't look much better than what we've received. Again, yes, there's been some movement this week, which has been great. Everyone's a little bit excited for that, but the forecast upcoming isn't as promising. And if we do get more rain, we do start to talk about not being able to plant at all, which is, again, prevent plant. That is part of your policy and included in. So what is prevent plant? It's the failure to plant the insured crop by that final planting date. We talked about those dates in those first couple of slides. If you get to that point, for example, corn in Illinois is June 5th. If I get to June 5th and I haven't planted yet, I can start to claim prevent plant on that ground. The failure to plant because of an uninsured causes of loss, such as lack of equipment, or labor, or the ability to plant the acreage, or use of a particular production method, is not considered a prevent plant. So it has to be an insurable cause of loss, like excess moisture. Drought can be a cause of loss as well. Of course, we don't have to worry about this year in 2019. But failure to plant because of uninsured causes like lack of water, irrigation, or equipment or labor doesn't count as prevent plant. The prevent plant guarantee on corn is 55%. You do have the option to buy up 5% on that to get it to 60%, but that had to have been done by sales close, which in our area is March 15th. Soybean guarantee for prevent plant is 60%. Again, you had the choice to buy up to 65% if that was purchased prior to March 15th. So those are the guarantees that we're talking about with prevent plant. Again, that 20/20 rule still applies. It has to be 20 acres or 20% of the unit, whichever's less. That's got to happen to be eligible for a prevent plant payment. PPA acres must be reported on your acreage report. Your insurance agent officer knows that, but make sure that happens. Every year we have cases where the prevent plant acres don't get reported on the acreage report. And when that happens, the prevent plant claim is denied. It's not payable because they didn't exist on the acreage report. So what has to happen is those prevent plant acres has to be reported on your acreage report. They just have to be listed as prevent plant. So they have to be reported. You're reporting all of your acreage that you're insuring for the county, for the crop that we're talking about on your acreage report. Again, your insurance officer knows that. Just wanted you to be aware it has to be listed on the acreage report. Cannot be changed. That's kind of a hard and fast rule. Acreage must have been planted and harvested or at least insured in at least one of the 3 previous crop years. Again, most of you guys are fit into that. You've had the ground planted. What this is getting at is you cannot continue to claim prevent plant over and over and over again every year. It has to have been planted and harvested or at least insured in that most recent history of that ground to be eligible for a prevent plant payment. Acreage must have been available for timely planting, proper preparation and planting, so free of trees, rocky outcroppings. You had to have, the ground has to be fit to be able to be planted for you to be able to claim prevent plant. Again, we talked about it has to be due to an insured cause of loss by that final plant date. We talked about that already. The cause of loss must be general to the area. We're not going to have any trouble fulfilling this requirement this year whatsoever. It's very general to the area. But in a normal year, when we don't have this much moisture, we'll have areas that will claim prevent plant. They may be the only one in the county. Those are cases that get a little more challenging to get them paid because it just wasn't general to the area. That's definitely not the case this year. There is no prevent plant coverage on our county-based policies like ARP or AYP. Those are the old GRIP and group policies. The adjuster is required to measure the field or fields to determine the number of acres because they're going to make sure that it meets that 20/20 rule that we talked about already. And in most cases will be required to take pictures of the acreage. They also have the ability to ask for input records to prove your intentions. As you saw on a previous slide, corn guarantee is 55%, soybean guarantee is 60% from a prevent plant standpoint of the liability, but we can all say here on this call that corn is going to have a bigger payment than soybeans. So to prevent guys from kind of flip-flopping and choosing to get paid on the higher crop, you actually have to have the intentions to have planted that crop. So the adjuster in a lot of cases will ask for seed receipts or input records to prove that you were going to plant the crop that you said you were going to plant, so that they can then pay your prevent plant payment. Moral of the story is whatever the adjuster is asking for as far as documentation, just be helpful and provide that so that we can get you paid. Eligible acres is a big component of prevent plant payments. And here's an example of how that works. So what the insurance company is going to do is they're going to look at your last 4 years of planted total cropland acres, all crops. And they're going to pick out the highest number that you've planted for those crops in the last 4 years. In this case, we're looking at 18, 17, 16, and 15. For corn, you can see here in this example that 350 acres is the highest number of corn acres that you planted. And for soybeans in 2015, there were 350 acres of soybeans that you planted. Those would be your eligible acres for prevent plant, not to exceed the total acres, which we haven't in this example, but we're gonna pay you on the highest amount of acres that you've planted in the last 4 years on those crops. You, the insured, can declare prevent plant by turning in a notice of loss starting at that final plant date. That's the earliest that you can turn a loss in. We'll go back to those slides that we covered in the very beginning, those final plant dates. You can start to claim PP in those areas. As you noticed in our first crop, second crop discussion and replant discussion, you are required in those areas to do something and either replant the crop or you cannot switch to another crop until you reach 10 days into the late plant period. You remember that discussion that we just had. Prevent plant's a little bit different. You can start to claim prevent plant right on the final plant date the day after the final plant date. So final plant date for corn in Illinois is June 5th. You could start claiming prevent plant on June 6th in Illinois for corn. The big difference there is for first crop, second crop, and replant, you've already planted corn out there. You've planted that first crop. Then you've got those limitations that we talked about where you have to replant within till June 15th in Illinois, and you can't switch to beans until the 16th. But when you haven't planted anything, now we're in this prevent plant window, and now you can start claiming it on the final plant date. The latest you can claim a timely filed notice of loss is, in this example, we're looking at Illinois, that June 5th is the final plant date. I got 20 days of a late plant period after June 5th, plus another 3 days to turn in a timely filed notice of loss for prevent plant. So the earliest I can claim prevent plant would be June 6th. The latest in Illinois would be June 28th. But remember, if you're in Wisconsin or Minnesota, some of our other areas, you will see that those dates do change. So you have to be cognizant of that. All right, continuing on. If you get out past those dates, then there is a process with a late filed notice of loss for prevent plant. However, those are approvals required from the insurance company to allow those to happen. So you really need to stay within those windows to turn in a timely filed notice of loss. So how does the prevent plant payment work? Prevent plant payments are based on the spring price only. We talked about that already, so there's no adjustment for any fall price increase or decrease. Payment calculations, 60% of the multi-peril crop insurance guarantee for soybeans and 55% for corn. We've talked about that as well, unless you were able to and chose to buy up by 5% on each of those. Again, that had to have been done by March 15th. That's what the payment is. So then going on to what your choices are as an insured as we enter into this area, you've really got 4 choices when you're thinking about prevent plant. The first choice is you can not claim prevent plant and you can continue planting into the late plant period. So again, we talked about it earlier, but I'll just recap it again. You will start to lose 1% per day off of your guarantee if you plant into the late plant period, but that is an option. After the late plant period ends for each of those crops that were outlined on those first couple of slides, your guarantee, if you planted all the way after the late plant period for that first insured crop, then your guarantee would drop to the prevent plant guarantee, which would be 55% on corn and 60% on soybeans. But again, big idea here is you can keep planting and not claim prevent plant. The second option you have is you can claim prevent plant on that first insured crop. So we'll talk about it from a corn perspective just to keep examples and discussion simple. So you can claim prevent plant on the corn. You can do that on the final plant date for corn, or start to do that. You can either leave the ground idle or plant an approved cover crop on that ground, as long as you're not haying or grazing that cover crop prior to November 1st. If you do those two things, leave it idle or plant a cover crop and don't do anything with the cover crop until November 1st, you can receive 100% payment of that prevent plant claim. And there is no APH penalty if this happens. By and large, this is the most common option that most folks do. They claim prevent plant and they do nothing else with the ground the rest of the year, unless it's a cover crop that they don't hay or graze prior to November 1st. You're going to get 100% payment if you go that route. Two more choices get a little more complicated. You can claim prevent plant on that first insured corn crop, and then you can decide to plant soybeans after that PP corn. However, there's one big caveat here that I want to cover here. It's underlined. If you do that within the late plant period for corn, so you're claiming PP corn and then you're going to go ahead and plant soybeans within that late plant period window for corn, if you do that, then that forfeits your prevent plant claim completely on the corn. The soybeans are insurable, and they do technically become the first insured crop, and you have full coverage on the soybeans, but you are going to you're going to have your PP claim denied or forfeited. And the real reason for that is if you're planting soybeans within the late plant period for corn, then RMA says, well, why didn't you just plant corn? If the ground was fit and you were able to get soybeans in, why didn't you just go get corn in and not have this prevent plant claim to begin with, right? So that's the idea behind that one. So that's a big no-no. If you're going to claim prevent plant corn on the first crop and you're going to plant soybeans after it, do not do it within the late plant period for that first insured crop, in this case corn. The fourth option is another viable option. This is where you have claimed prevent plant on that first insured corn crop, but then and you do plant soybeans, but you're waiting until after the late plant period for corn to do that. In Illinois, that example gets you out to June 26th. If you're going to plant soybeans after June 26th, then a couple of things happen then with your prevent plant payment. Number one is if you do that, you're planting a crop after the prevent plant first insured crop, your prevent plant payment drops to 35%. The other big penalty here is if you do this, then you're going to get a yield plug penalty of 60% of your approved yield into your APH for those corn acres that you claimed prevent plant on and then planted beans on behind. You must insure the soybeans if you do this. However, you're going to have some pretty significant penalties, we'll say, as far as the APH plug, and also only receiving 35% of your prevent plant payment. I said there was four options. There's really a fifth one here to be technical. The fifth option, which does not happen very often at all because it is so late in the year for this example, but this is an example where you have claimed prevent plant on that first insured crop, in this case corn. You do plant soybeans, but you wait all the way until after the late plant period for soybeans. So looking at our different states from an Illinois, Wisconsin, and Minnesota perspective, that could be July 6th, July 11th, or July 16th, depending on what state we're talking about. Again, talk with your insurance officer to get a better grab on what your state and what your date is. But if you wait all the way after those dates and plant soybeans after the prevent plant corn that you claimed, a couple things happen there. You still get only 35% of your prevent plant payment. You also still get the yield plug penalty of the 60% of your approved APH plugged into your database. The only difference here with this option and the previous fourth option is now you can choose not to insure those soybeans because they are planted very late after the late plant period for soybeans. I hope you've enjoyed this quick webinar. Thank you for your time. Contact your local Compeer insurance officer or visit our website for more information at www.compeer.com. We are thankful for your business. We want to give you the best advice possible for what your options are as we're sitting here in a very wet spring. If the forecast does not play out the way it looks like it might, and we get some dry weather and we get crop planted, then a lot of this discussion goes away. But as we continue to move through May and we continue to get more and more rain in the forecast, these topics just become inevitable, to be honest. So I would encourage you to contact your insurance agent, or go to our website and get some more information that we can better serve you, our customer. Again, we're thankful for your business, and we're thankful for your time that you've spent with us today. Have a great rest of your day.